Howdy, everybody. Welcome to the Liberty Call. I am Raymond Dahlman, your humble host, and it is Wednesday, May 7th, 2025. Hope you're having a fantastical day out there in the interwebs. It's another gloomy day here in Colorado. We got a lot of rain, and it was snowing yesterday, which was the highlight of our evening. So my little puppy, I guess he hadn't seen snow while he was in the kennel when he was being, raised up until he was 2 months old. So he got to see snow for the first time. He was very excited. He learned that there's food that falls from the sky. My older dogs love to eat the snow, and so does he now. So anyways, all right. Well, the Fed hit pause on rate moves, but warned inflation and job market risk are rising, thanks in no small part to tariff turmoil. Well, there's other problems that we've talked about, but we can go with that. The Dow managed a small gain, well, actually a pretty big gain here at the end of the day, but the S&P 500 and NASDAQ had slipped, but they finished up in the green. Also, I wrote this before the market closed. Let's see here. Alphabet and Apple teased a Google breakup, and Disney, meanwhile, played hero with a strong earnings boost. So before we break all the news down and all the stuff, if you could do me a favor, give me some thumbs up, a like, share, subscribe, follow, and press the notification bell. All righty, well, let's hop into the markets. There we go. All right, Dow Jones finished the day up 0.7%, 284 points, closed at 41,113. S&P 500 up 0.41%, 22 points, closed at 56.29. NASDAQ up 0.27%. Like I said, everything came back out of the red here at the end of the day, probably after Chairman Powell's speech. It was up 48 points, closed at 17,738. The VIX down 4.81% today. It's at 23.57. Canada up 0.75%. Brazil down 0.17%. And Mexico up 1.04%. In Europe, Germany down 0.57%. The UK down 0.44%. France down 0.91%. Netherlands up 0.05%. Spain down 0.37%. Italy down 0.62%. Switzerland down 1.05%. And Portugal up 0.19%. Russian exchange is green again today. The MOEX up 0.52, RTSI up 0.65. And the Asian markets, the Nikkei in Japan was down 0.14%. Australia up 0.33. New Zealand up 0.16. In China, the Shanghai up 0.8. Shenzhen Component up 0.22. China 50 up 1.04%. DJ Shanghai up 0.6. Hang Seng up 0.13, and the Taiwan weighted when closed on the 6th was down 0.05. All right, so those are the markets for today. I mean, things were swinging wildly, after the Fed, what they were going to do. I mean, it wasn't really a shock that they didn't do anything. Be curious to see a write-up on Chairman Powell's speech, and then obviously they'll probably be talking about what's going to happen at the next meeting, which will be in June on the 17th and 18th. All right, so let's get to the market recap for today. SP 500 in wild swings on Alphabet slump and the hawkish Fed. The SP 500 wavered between gains and losses Wednesday as markets digested mixed corporate earnings, a hawkish Federal Reserve pause, and no signs of tariff relief from President Trump. The Federal Reserve held interest rates steady, but struck a cautious tone, citing elevated risks of both inflation and unemployment due to continued trade policy uncertainty. The Fed emphasized a wait-and-see approach as it monitors the economic fallout from steep tariffs, especially those recently imposed on Chinese imports. President Trump dampened hopes for a quick resolution to the U.S.-China trade standoff, reiterating he had no intention of rolling back the 145% tariffs on Beijing. His comments came ahead of a planned May 8th meeting in Switzerland between U.S. and Chinese trade officials, which some hope could mark the beginning of renewed talks. Still, Trump's lack of urgency has left markets jittery about the prospects of a prolonged trade conflict. Alphabet dragged tech stocks lower, falling over 7% amid reports that Apple plans to launch its own AI-powered search features, posing a threat to Google's dominance and its lucrative default search placement on Apple devices. Apple noted a drop in traditional browser usage as consumers shift towards AI tools. Meanwhile, Disney surged more than 10% after strong earnings and subscriber growth in its Disney Plus, while Uber and Supermicro declined on weak bookings and revenue misses. Respectively, AMD provided optimistic guidance as clients accelerated orders ahead of tariff deadlines. Marvel tumbled after posting its investor day due to market uncertainty. Overall, investors remain cautious as Fed policy, tariff tensions, and mixed earnings all fuel uncertainty ahead heading into the summer. What they say, sell in May and go away, come back in August or September. So, I've never been one to really believe that, but there's a lot of traders out there who go by that. All right, got some data here. Consumer credit surges above forecast, signaling a bullish outlook for the U.S. dollar. This comes to us via investing.com. Let's see here. Consumer credit in the U.S. surged by 10.17 billion in the latest data release, significantly exceeding the forecast of 9.8 billion and marking a strong rebound from the previous month's contraction of 0.61 billion. This turnaround suggests renewed consumer confidence and a potential boost in consumer spending, an essential driver of the U.S. economy. The shift from a negative to a strongly positive figures highlights a dramatic change in consumer behavior. Consumers appear more willing to take on debt, likely for discretionary purchases or to manage inflationary pressures. This willingness to borrow is often interpreted as a sign of optimism about future financial conditions, supporting expectations for increased economic activity in the coming months. Or here's the alternative. People are stretched so thin that they're borrowing money like crazy. And that's where how they're paying for all this stuff. We'll see. From a macroeconomic perspective, the rise of consumer credit is a bullish signal for the U.S. dollar. It implies stronger domestic demand, which can boost GDP and corporate revenues. The data also supports the narrative that American consumers, despite recent economic headwinds such as tariffs and inflation, are maintaining their spending habits. That's it right there. People are still buying the same crap at a higher cost, and they're probably rolling it onto credit cards and things like that. In summary, the stronger than expected consumer credit growth points to improving sentiment and sets a positive tone for short-term economic prospects. If this trend continues, it could contribute to sustain momentum in the U.S. recovery and support monetary policy flexibility. Spoken like someone who likes low interest rates. All right. Next up, got another article here. This one's from Zero Hedge. Crackdown on student loan defaulters to begin with benefit seizure, then wage garnishment. So if you know anyone out there who hasn't been paying their student loans, you may want to pass this on to them. And this was written by Tom Ozimek of the Epoch Times. The U.S. Department of Education announced on May 5th that it will resume seizing federal benefits from student loan defaulters beginning in June, ending its years-long pause initiated during the COVID-19 pandemic. About 195,000 borrowers will receive 30-day notices before collections begin through the Treasury Offset Program, which allows the government to intercept tax refunds and Social Security payments to recover unpaid student debt. Additionally, 5.3 million borrowers will face wage garnishments notices later this summer, making a full return to involuntary collections. I did collections for a decade. Fun stuff, tracking people down who don't want. I don't know. I wonder if it's harder or easier to reach people, because back in the 90s, everyone had a home phone. Even if it wasn't in your name, you lived with your parents or a friend or whatever. You had a house phone, or phone where you lived, apartment or house or whatever it might be. Today, everybody has a cell phone. And there's a lot of rules around, because I remember back in the early 2000s when I was still in the business, and you weren't allowed to call cell phones unless you had permission, because they get charged. You're charged for airtime, and so there was a big hullabaloo. You had to get permission. It had to be marked on the customer's the customer's file in the CRM that you were allowed to call it. So I wonder how that works today. I mean, there's not phone books anymore and stuff like that. So but people put everything online. So, so from that respect, maybe it's easier to track down the deadbeats. All right, jumping back in, this move concludes a freeze first implemented in March of 2020 under President Trump and extended under the Biden administration. Although loan payments resumed in fall of 23, enforcement actions remained largely paused until now. The Education Department cited fairness to taxpayers and the need to address delinquency. Nearly 10 million borrowers are behind or in default. Shocking. To avoid garnishments, borrowers are urged to enroll in the income-driven repayment, the IDR, or begin loan rehabilitation. Institutions with high default rates risk losing access to federal aid programs. Secretary of Education Linda McMahon emphasizes that colleges must improve outcomes and affordability, noting plans to publish institution-level non-payment rates. This informant follows the Supreme Court's 2023 rejection of President Biden's sweeping debt forgiveness plan. McMahon reaffirmed that the department will not pursue mass forgiveness, and why should they? Citing or stating the executive branch lacks constitutional authority to cancel debt unilaterally. Critics of forgiveness cite fiscal irresponsibility and unfairness to borrowers who pay their loans, while supporters argue it would promote economic equity. I doubt it. So I didn't have any student loans. I didn't finish college and just basically learned everything on my own. So I did get some benefits from the military for the GI Bill, but of the 14,000 that was awarded to me, I think I probably used maybe about 8 of it, in the junior college I was going to. So, but yeah, it's not fair. I mean, I didn't, told my kids they're on their own as far as their own education if they're going to go off to college, and one did, and one joined the Navy. So they turned out all right. All right, one last article here, also from Zero Hedge. Fed rejects Trump's call to cut rates, warns of increased stagflationary uncertainty. So I think this was written before the Fed meeting, or before Chairman Powell commenced his yapping. Since the last FOMC meeting on March 19th, markets and economic signals have been volatile. The U.S. experienced, quote, Liberation Day, end quote, a bond crisis, a stock market crash, a tariff pause, a rebound in equities, a conflicting economic data. Despite the turbulence, the Fed held interest rates steady at 4.25 and 4.5 range as its May meeting, citing risks on both inflation and unemployment, signaling concerns about potential stagflation. While soft data, surveys, and sentiment indicators have deteriorated, hard data like employment and spending remain strong. Treasury yields have risen, crude oil prices have collapsed, and gold has surged in performance since March. China cut rates and injected liquidity, while Trump is pressuring the Fed for cuts ahead of the election, echoing Powell's 50 basis point rate cut in September 2024 under a Democratic administration. Well, they shouldn't have done that at the time, Mr. Trump. Despite similar financial conditions today, tight credit, weak soft data, and a market crash, the Fed opted to pause rather than preemptively cut. This has raised questions about the political influence on monetary policy, particularly as Powell acknowledged increased uncertainty and noted trade distortions that dragged down Q1 GDP. Markets now expect 3 rate cuts this year, up from 2 earlier, with attention now turning to Powell's post-meeting comments for clarity on the future direction. Yeah, I can just tell you right now what Powell said. A lot of, just what's the word I'm looking for? Talking points and things that really don't say anything. Lots of word salad and basically say it's a wait and see approach. I can guarantee that's what he said. Having not watched his press conference yet, I have a strong feeling that what he said was, we're going to wait and see, and we're going to be data dependent. Duh. That's what everybody does. So anyways. All right. Well, that's everything that I had to cover for today. If anyone needs anything from me, where do you want to go? DSAFinancialGroup.com. All your financial planning needs can be addressed there. So give me a call. I'll be glad to help. All right. Well, hope everyone out there has a wonderful evening. Well, let's hope that the rain clears soon. I'm tired of staying inside, and me and the boys want to go out and play some ball time out and not get all muddy. So, all right. Well, hope everyone out there has a wonderful evening, and I'll talk to everyone again next time. Adios.